It starts before you've even had your coffee. While most people scroll headlines or check portfolios, a quiet, invisible force is already moving billions. It touches nearly every asset you own, but almost nobody talks about it. This is the force that shapes global markets every morning. Not investors, not news, not speculation, something far more powerful. It doesn't care about your plans. It doesn't notice if you bought Bitcoin last week or if a government changes policy. Try to fight it and it will crush you quietly, efficiently. To understand it, you need to step back, way back. Every morning, trillions of dollars flow across New York, London, and Tokyo. Prices rise, prices fall. Headlines scream volatility. Analysts scratch their heads. But here's the uncomfortable truth. Almost none of it has anything to do with actual economic activity. Most of it isn't based on companies growing or profits rising. It's called the liquidity pulse, the heartbeat of global markets. Every morning, it decides which assets jump, which sink, before the rest of the world logs in. Regular investors only see the effect, not the cause. Banks, governments, and institutional investors don't just react. They create the market. Central banks inject billions overnight, not as a donation, not as a visible stimulus, but as a temporary flood of cash. Traders wake up to a market that looks eager, liquid. Prices move, and the public sees only market volatility. Money moves in layers. First, cash. Second, leverage, borrowed money, and derivatives. Third, algorithmic trades reacting in milliseconds. The top 1% operate in all three at once. They know where liquidity will appear before anyone else. The irony? Retail investors chase ghosts, seeing only the end result. In 2023, $120 trillion was in global equities. Overnight injections of $3 to $5 billion ripple across markets, influencing stocks, currencies, and bonds. Retail traders interpret this as panic or sentiment, but it's math, not emotion. 2008 wasn't just about bad loans. The real trigger? A sudden withdrawal of liquidity. Overnight, money stopped flowing, assets froze, people lost homes, retirement accounts evaporated, institutions controlling the pulse, many profited. The math favors insiders. This pulse is predictive. Algorithms anticipate inflation reports, interest rate changes, even geopolitical events. By the time you see the news, it's already priced into the market. One tweak from a central bank can cascade globally, like dominoes. Markets are rarely rational. A company can be growing steadily and still see its stock tank. Timing is nearly impossible without access. Retail investors are always one step behind. Ignoring the pulse isn't ignorance, it's risk. This invisible force shapes the rise and fall of countries, the success of corporations, and the concentration of wealth. Talent and hard work are only part of the story. The rest follows the pulse. Most people plan life and investments as if it doesn't exist. The pulse is relentless. It moves billions before markets open. You don't see it. You can't negotiate with it. And yet, it shapes your wealth, your choices, your future. If the force controlling global markets is invisible, predictable, and decisive, how much of your life is really under your control?